After CEO Elon Musk announces ownership on Twitter on April 4th, the stock of Tesla has been volatile, dropping 42. This development hasn't stopped one Tesla bull, though, as he thinks the stock will surpass itself in the coming years. David Lee is the host of the well-liked investing YouTube program and a Tesla bull. He is well known for being a devotee of Tesla, and in a recent article, he claimed to have increased the value of his first investment in Tesla's stock by 100 times. He stated that he anticipated the market value of Tesla stock to increase from $3 billion to $40 billion tenfold when he first bought it. Now that he said it, history might repeat itself. Which statistical evidence supports this belief? What is the consensus among analysts? To find out, keep watching. It's possible that some investors are questioning whether Musk has lost focus on one of his most lucrative businesses. Tesla has developed into an incredible force to be reckoned with, even as the drama involving Musk and Twitter gets more intricate. Investors were thrilled when the company revealed a great first quarter and set ambitious long-term targets despite the stock market diversions. Still, the question that has dogged Tesla for years remains. Is its valuation excessively expensive considering what it accomplishes? Recently, historically high inflation, rising interest rates, and the economic fallout from Russia's invasion of Ukraine have tested growth stock values, although the CBOV Volatility Index, also referred to as Wall Street's fear gauge, has increased by more than A during the same period, signaling investors' concerns. The NASDAQ Composite has decreased by 28 year to date. One of the most contentious stocks on Wall Street, Tesla, has currently joined the sell-off after losing 41 of its value since the year's beginning. The biggest and most cutting-edge manufacturer of electric vehicles is still Tesla. According to industry website Cox Automotive, Tesla has a 75% market share in electric vehicles and sold more high-end cars in the U.S. in the fourth quarter than Audi, BMW, Lexus, and Mercedes-Benz put together. 10 years ago, you might have invested $10,000 in Tesla founder Elon Musk. And today your money would have returned more than 70 annually on average. $10,000 invested in the S&P 500 increased by just 2 throughout that period. That's a yearly compounding rate of just 14. For those investors, we're talking about an almost 13.8 increase in value. That means that a $10,000 investment made 12 years ago would now be worth $139,000 million. Given how quickly Tesla has risen to prominence, we can certainly appreciate why some people might be dubious of the company. About 1 million electric vehicles were supplied by it in 2021, and in the first quarter of this year, it delivered an additional 310,000, a 67% rise from the year before. As a result, Tesla is now on track to deliver 20 million Tesla vehicles by 2030 as per Musk's goal. Lee claims that the same mistakes individuals made with the original iPhone are being made with Tesla. In his opinion, Tesla is only beginning to embrace complexity through innovation. As we previously stated, he was shocked to learn that owning common stock in Tesla has increased its value 100 times in less than 8 years. He believes the stock will rise even further, up to 100 times higher in the next 8 years. And the automotive sector, Tesla is the most valuable stock. At the time this film was made, Toyota, the second largest automaker, was valued at roughly $226 billion. In comparison, its valuation is more than twice as high. Additionally, its value exceeds the sum of the values of Ford, GM, Stellantis, and Honda. With a market capitalization of roughly $738 today, the EV leader stock has since declined from its peak of over $1 trillion in late 2021. When will Elon Musk's $1 trillion firm reach its previous level of valuation? On the other hand, sales growth is still accelerating. Furthermore, it is now profitable, and the rate of growth in earnings is rising. Despite general economic challenges and Musk's well-publicized potential acquisition of Twitter, Tesla's business is nevertheless expanding quickly. The Model I and Model 3, which are electric crossovers and mass-market sedans, respectively, are largely to blame from its gigafactory in Texas, where it is integrating its own 4,680 battery cell. It has now begun exporting the Model Y. Given the auto industry's continuous supply chain difficulty, this is likely to be a big advancement. It is reasonable to believe that Tesla will lead the sector for many years to come, and that its stock will continue to be a great investment for the same amount of time despite the insane personality of its CEO. Lee claims that far too many individuals base their assessment of how their firm fared on their understanding of the earnings report in relation to analyst projections for metrics like EPS, revenue margin, and other metrics. He went on to say that the problem with this approach is that analysts do not own the majority of common stock shares. Some analysts are employed by businesses where they do not hold equity. These analysts don't care if the company's results surprise or disappoint them. The expectations of investors and analysts are often at odds with those of new, fast-growing businesses. This is accurate, as Tesla has been routinely exceeding analyst projections for a considerable amount of time. The company's fortunes were increasing even though the stock price was declining. Tesla said on April 2nd that first quarter deliveries were up slightly at 310,000 and production was at 305,000 despite a closure of its Shanghai facility, issues with the supply chain, and higher material costs. Regarding automobile manufacturing, Tesla has been the subject of a flurry of favorable publicity lately. Car revenue climbed by 80 CFBRL in the first quarter of the year due to a 69% year-over-year rise in output. Because sales increase more quickly than manufacturing, Tesla is seeing higher profit margins on every vehicle it produces. This increase in margin is partly attributable to pricing hikes that will take effect throughout 2021 and to increase production efficiency for the company's more expensive Model S and X vehicles. On April 20, 2022, it revealed $18.08 billion in revenue for the first quarter of 2022, an 81% increase over the same period the previous year. This exceeded analysts' short-term estimates of $17.08 billion, boosting the shares. Furthermore, it finally opened a $5.04 billion production facility in Berlin, which was intended to service all of Europe. Additionally, a stock split is planned, which should attract individual investors to the stock more. Tesla is about to make its debut in the luxury car market. Consequently, instead of being valued at 6 times earnings like General Motors or 8.6 times earnings like Toyota, it should be valued at 35 times earnings. Tesla is still worth 90 times earnings, but if it keeps growing, it might get there. Investors were also informed of some good news by management. In the coming years, it wants to raise car deliveries by 50 annually. By 2022, Tesla may earn $14.09 billion if revenue growth is projected based on this estimate and retaining the company's 17.7% profit margin. Accordingly, Tesla is priced at 49.5 times its total earnings for 2022, which is not terrible for a company looking to grow at a rate of about 50 annually. What then are the main forces behind Tesla's stock price? Most obvious factor driving Tesla stock prices is the company's constant innovation and Elon Musk's visionary leadership in the business world. The company might benefit in the coming years from any rise in gasoline prices or new laws pertaining to cars with conventional internal combustion engines. The top and lowest price objectives of experts, however, differ significantly in terms of pricing. A year from now, the most optimistic experts believe the stock will reach $1,580. The lowest price prediction was only $250. Algorithmic forecasting of wallet investors is more upbeat on the company's future. The analysis says that the stock is an excellent long-term investment and that it may reach $12, $17 in the coming year. At the same time, the company's 5-year forecast indicates that the price of Tesla's stock might hit $28, $46. Tesla is leading the way in the increasing market penetration of electric automobiles. Tesla is currently a fantastic investment if you plan to hold the stock for the long term, which is 3 to 5 years.